subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to go back in time to 1987. This was August the 25th. The market made a high on harmonic convergence. That was the day the Mayans said that, well, everybody thought the Mayans said the end of the world was coming. Basically, it was 5 planets lined up at 0 degrees, and you can see we had the big break. This first break right here went right down to the 382, which was the solar eclipse. Then we rallied up into October the 2nd. You can see the ABCD Gartley sitting there. And at that day, I bought October puts that expired on the 16th. And as you can see here, as they expired on the 16th, that Friday, I was really happy because it completed the ABCD, got every single cent out of those puts that I could get. Except, let's go to chart number 2 as we open the door, and we'll get up here and take a quick look at it. Here's the day of the crash. Okay, now here was the pre-cash. There was where we were on Friday when the puts expired. Okay, that was down 6%. It was a 20 bagger for me, folks, from October 2nd to the 16th. It was 20 times what those options paid for. However, if I'd have been in November, as you can see, it would have been about a 200 bagger. And of course, the market came down here. You see
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
So you've got the S&P at this particular point kind of following the Dow. Oh, I always do that. I forgot to click this chart. That's the chart I want. Okay, there it goes. SPX.X. There we are.
Broadsword to Danny Boy. Broadsword to Danny Boy.
I love our positions because we got in so beautifully, but I'm anticipating they're going to be pulling back. I want to add at them at the appropriate moment. I didn't want to go to any short side just now. I needed to let today fulfill its obligations of either telling us that the spike on Friday was just a misnomer, it was just wrong, or it was the start of at least a rally that can go towards the end of the year, just as arching over and then maybe come back and retest the low that was made on Friday. That's really what I'm looking for. S&P red candle, 22 down at 59.07, made an all-time high of 6,099.97 right there on the 6th of December. And at a peak D, remember we were waiting for those Ds. The Dow was the only one that never did it. Made it a little confusing for me. Pity, because we had everything set up very nicely. And now what we're looking at is the QQQ. That is trading off the high. Look at this. The all-time high went to 539.15 with a 533 round number open on the very day. And then a Chapman Wave silent doji the day after, tiny little doji candle. And that was the at least the start of a big move down. We actually had the short SPXS 3 times short. We've taken profits in that. It's a pity actually that it got stopped out on Friday because of that big move. That was a shame. I actually wanted to hold it here if it was possible, even though I didn't expect it to garner that much in points, but it was a position anyway. IWM Russell 2000, not good, down 230 at 219.57. Doji candle peak E right at the top. That was in late November, and a D, peak D. And remember, Chapman Wave, you're always looking for D because D is where other things can happen. That's where we could have a serious top or an instant restart to go back up again. 244.46 November of 2021, 244.98. Last month, I mean, within $0.50, unbelievable. After going all the way down to 161, the low in October of 2023, comes all the way back and then stalls right at the previous high. That is always a phenomenon to me. I also wanted to mention this because I might even forget it. Amazon made a round number all-time high. That was on December the 16th at 233.00. Apple made a round number high on Friday. It went slightly higher today, but that round number high I have to keep in mind as a hidden.
If you're looking for a potential...
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Amazing money.
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, 2,100 total.
Oh, wow!
But you have to hurry because this holiday Tiger Dollar double bonus sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, this is the S&P. Well, let's try it again. It was the Dow Jones, 1929. There it was, September the 3rd. Had the break taking out the August lows, and then had a really strong 5-day rally right up to the 61% retracement. This, to me, is the equivalent of that big day we had down in the S&P, second worst day ever. Was the other day. If you remember, we were down, I think, 3.5% or 2.5% in one day. But let's take a look at, you can see all of these retracements were 382 all the way down through here. This was the crash low here. The market rallied up for 2 days, made a 382 retracement, and then came down and made the low on November the 12th. That was the low, 200. And then from there, it rallied up to about 300. And then from 300, it went down to 42, that bottomed on July the 8th of 1932. So it was a 3-year bear market. So the reason why I'm showing you this, folks, we're seeing the same thing someplace here in Hitherland or whatever it's called. This is Bitcoin. Now we'll look at Bitcoin. There's your first 382 retracement here. There's your second 382 retracement here. There's your third 382 retracement here. I ask you, do you know anybody that wants to be long this stuff? Hello, operator. Of course, it's probably rallied up and made new highs today already. Anyway, pay attention to it because there's a lot of people out there in this. This may be the black swan event that may or may not move the market lower, and maybe it's never going to go any lower at all. I'm just pointing these out to you because it looks interesting, because they line up, you know, so very beautiful. But believe me, folks, this market has not turned down as of yet. If we look at the E-mini today, there was a high that we made on the 20th. We made an ABCD pattern here, exactly at the 50% retracement there at 59.65. The low was 59.65, and we're up to 60.20 already. We probably make another new high, but we still have not made. There's the 61% right there. on the futures, but the cash has not made that as of yet. The cash has been lagging badly, and it's still lagging badly today. But let's look at the one that everybody has on their mind, and that, of course, is the NASDAQ. And then we're going to take a look at the NASDAQ. Now, here's the NASDAQ. You notice the low that we had back here on the 20th, all right? Look at the low today, exactly 382 to the tick at 21,475. What was the low? 21,477. That's pretty close. Look at the ABCD coming right down to it, 1.618 expansion. We're now trading up here in 217 and change already. And that means this top is not finished yet, especially the day before a holiday, which tomorrow's a holiday. Well, actually, the holiday's on Christmas, but the day before the holiday, which is the 24th, 75% of the chance that the market's going to close up on that day. But if it closes down on that day, that's a very, very bad sign, because that means something's not right. But anyway, that's what we're watching on some of these here. This morning, they're just numbers. That's all it is. I mean, they're just one number after another. Sometimes they work, sometimes they don't, but they're very interesting. Now, here's where we were on Friday with the S&P. Now, you notice the S&P cash has to get up here to make the 61% retracement. We're very, very close. We're trading up in this area right now, so we should make it here at 597, and we might even go up and make a new high. Would that invalidate the thing that I'm looking at? No, it would just be that this fact that it's going a little bit higher than I thought. Folks, this market is so bearish, well, for so many reasons. But if you look at the Dow Jones is just barely making a 382 off of that. It was down 300 points at one time today. Now it's down less than 100, if it's still down. But let's take a quick look at that. We could probably look at that. Here it is right there. It's just sitting right at the old 382 right now as we speak. There it is right there. There's your old 3. There's we are. There was your 61% retracement. What did it do today? Came right down to the 61% retracement. And over the last 4 or 5 hours, for 3.5 hours, it's been flirting here with the 382 retracement of this whole range down. If we blew up this and just looked at it from a longer time frame instead of a microscope, we're just going to look from your low. I've got a new mouse, folks. Man, am I in Tech City here. Look at the 61% retracement. You think those boys in New York don't know what these numbers are? Give me a break. Of course they do. And if you did a little bit of the old H.M. Gartley, ABCD, there's AB, and there's your C and D, and there it is right there, right on the money. And there's your 61% retracement. All we're doing now, over 1, 2, 3 hours, all we've made so far is a 382, and the Russell is even more dramatic than anything else. So that's some of the things that we're watching here this morning here with these things moving around. Now I will cover Tesla and also get Tesla right up here. If you remember, we were looking at Tesla at the 382 the other day. There's where we were. On Friday, it rallied up to the 382. You can see today we did make a slightly lower low. That was at 244. We came down to 416. That was a nice $30 profit. If you did that, you can see it was doing not too much right now, but it's still nothing really bearish about it. If you just blew this up a little bit, you'd probably see from the last major low we had back here on the 27th of October, right after Thanksgiving. Where'd we go to? We came just a little below the 382 right here in Tesla. And the next one we want to look at is Apple, Mr. Apple. We'll get this up here, take a quick look. It's made new highs again today, folks. It doesn't make any difference. This is the most active stock for people in the world. More people own this stock than any other. And then you'll see here, we did make a new high. There it is right there. There was the high on the 18th, and we made another new high right up in here today, and we're still making a new high as we speak. So the bear market has not begun here for Apple, but maybe it will, maybe it won't. I don't know. All I'm telling you just looks extremely bearish when you look at all the things that are out there that make these things jump around the way they do. I've got a couple others here that I wanted to share with you. First of all, we've been in some things that have been working pretty good. If you'll notice here, the cattle that we looked at, we've been trying to add to the position here in the live cattle. We'll get this up here so you can see it. We didn't quite make it right there. Yesterday, even today, it missed it by about 20 cents, so it's still headed lower. We sold it here. It's got 5 handles in it, which is a pretty good run, and our stop is right above this level. And then also, if you remember, we bought some soybean meal the other day, at the 190, excuse me, let's try that again, Larry, 188 level. Let's get that up here, and we'll get, there it is right there in the meal. Bring it up, and had a really nice run last night, and still has, you know, a really nice profit in it because we bought it, still has $1,100 profit. We bought it right here at 88. It's now up here at 99. That's a pretty good run. Now we got up to this level right here. I was watching it because I was watching this 60-minute chart. So what I did was I got really cute. I went down. No, it's not. I'm not cute. Let's guess. This is what I watched last night. You can see here. I'm looking at this, and I'm long it, and I'm saying, why did that stop right there? And I looked, and I said, my goodness, I ought to take a profit here in the old thing, and I didn't do it. But anyway, that's what it is. And here it is down. And the old 382. We'll be right back. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is the British pound. We talked about this ABCD here on the 20th. We had a pretty nice rally off of that, well over $800. You notice it has stopped right here. I want to show you this because remember this 126.15. If we go to the hourly chart on this, it's just going to jump out at you like you won't believe it. Let's move this over and get it over way back to here when we were way up there at this 128 level. But if you come down and draw that in, there you were this morning, folks, right there. And as you can see, we're headed down again. This is another nice little trading opportunity. We saw the same thing in the euro, but I wanted to bring this out to the British pound. And you'll notice we had the big A, B, C, D to the downside, along with this one, double A, B, C, D. That tells you that usually has a pretty good rally, and we did. We rallied. The fact is, it was the best rally it's had since we were way back here. So it looks like lower prices. If you remember here on the long-term weekly on this, we got a big number staring us right in the face here at this 123 level. 123, I've got it marked on this chart somewhere. There it is right there, right there in front of me. Larry, why don't you take a look at it? There it is right there. These were equal moves. You can see this following the prognosis of what we're looking at. And if you look at the day, this should come down here just about another 3 or 4 weeks in early January. And early January is a really strong reason for these currencies to change. I don't know if these countries are making their budgets and stuff, but of the 29 cross rates that are in there, the British pound is, one of the top 4 or 5. So they've got to pay, really close attention to that as we're looking at it. Now let's take a look here also at the Japanese yen. That is also very interesting. I'll cover crude oil here in just a minute, folks, but I want to do this Japanese yen here, and then I've got to do natural gas because we had a really beautiful pattern in that over the night. You can see here's where we are here with the natural. Well, we're almost ready for a sell signal here in the British, the Japan dollar yen. Let's just look at this on the hourly chart so we can see if there's any resistance up in here. There's where we've been all this time, and you can see there's the 61. We're still sitting there right now. And it appears that if this AI is correct, we're probably getting ready to have a little bit of a sell-off here. But, again, this is the last part of the day, so it probably doesn't really mean very much as we're watching some of these things unfold. But we do need to look at the euro because, that's part of the U.S. dollar index to the tune of about 57%. And we'll get here to take a quick look at it. And there's our euro coming up here. Put this up on the hourly. You notice it's been going down quite a bit also, and you'll see we've had a little bit of a movement today, and I mean really small. There's what we've done over the last few days. The market's had a little bit of a rally here of about 100 pips, and if you go back and look at it from the last big high that you had way back here on December the 6th, which was the high of the stock market supposedly, and there was your 382 came in almost to the exact price up here, and now we're heading down. And as you look at it today, all you're seeing is a 382 on this. We'll go down to the 13-minute and see it a little better. But there it is right now, what you're watching. Just clean that out just a little bit, and there's the 382 coming in. And I think it's going to be a little bit higher because you got an ABCD in here. So let's just measure from this high right here to this low right here and take it right up to the 0618. Wow, you're only 30 pips away. So keep an eye on that one, folks, at 104.25. That's only 14 pips from where we are right now here in the euro as it's trading as we speak. So let's move on over here to the next one. And we want to cover that, and we need to cover one other one, and that is the Canadian dollar. Because Canadian dollar has been really, really active, folks, both up and down. And today we saw something just a little while ago that it was completing, and we're going to be, oops, it already completed, son of a gun. Here's where we are right now. It's coming down right here. There's the big run-up that we had here. This was when the Fed came in. Now you can see the 135 pattern that came into this level right here, and it's just been dropping and dropping. Refresh the last couple days. There it is. There's your movement down, and it's still going lower. So I'd be watching a little 382 rally on this. And the reason for that, folks, that weekly high that we went through like it didn't even exist way up here is almost going to reinstate itself below that level. So that just means that because the influence of the Fed, this thing went higher. So you want to try to find a place to get short. You had a big run up like here, try to find a place to get short. And the easiest way to do that is to watch for a nice ABCD 382 coming in at that level right here. But we've come down just today, today. Wow, are you kidding me? It's dropped that much? 144. That's a big drop in the Canadian dollar. So that missed that one. Didn't see that. I saw the 135 in here, but that was earlier, and that was on Friday. But now it's completely going down a little bit lower. So those are ones that I'm looking at, and we have to do one other one here, and that is the Australian dollar, because they just beat that up something fierce. And we'll get up here and we'll get this. You'll see I've got to do the daily. Hold on a second, because it went down so much farther than we thought it was going to go down. And now we're taking a look at it right here. We went lower. Whether this is some type of a bottom, we took out the lows here from August by quite a bit. And if you drew this across here, you can see that we've taken out the lows by quite a bit here. So for this to change trend, it's going to take quite a bit. So look at this on an hourly basis and see if we see anything that even appears to be a 382, and there isn't. This is just a little bit of a bounce here in a bear market, and it is pretty bearish. As you can see, all these rallies here, I'll bet you most of them were pretty much spot on to 382 somewhere, because there was the big move down. And we'll do one at a time here to see how close they came to 382s. There's your first one right here. It went right up to the 382. You had another one that went right up to the 382. You had another one that missed the 382, and so did that one. But now you got a high in here, so you got to pay attention to that one, because that was a good recovery high. If you go from that, boy, this mouse is so cool. Jason, I know you're listening, buddy, and thank you for this mouse. This is the easiest I've ever had it. There's your 1.618. You have a really nice rally right here. So we want to check to see what that one was, because it might, nope, it didn't make it. I'm just eyeballing it, and I can tell that it missed it by a little bit. Yeah, I was looking for the 382 to get to there, and it didn't. All it did was make a 61% retracement of that other high that was right there. That's all it did. Okay, and what does that do? That takes you down to this 1.618. Oh, we went through that too. This is still looking pretty bearish, folks. So you don't want to touch that Australian dollar yet, but it's got to have a bottom here someday, but we're not interested, so we're not going to look at that one again for quite some time. We're going to take a break here, folks. 877-927-6648 in 54 seconds. I had my clock wrong. We'll have time to look at soybeans, and I'll get this up here. I'm getting really friendly to soybeans, folks. We're going to be looking at something right after the first of the year in the beans. So let's get it up here. These are March beans we're looking at now, and we've had a little bit of a bounce here along with the meal. We were already long the meal, and you can see we had a big down move made right to the old price that we're looking at. Then we had to rally up, and all that rally up, let's go check and see from the last high down to the low, misses the 382 by 1 cent. That means we're getting ready to back off, and we want to watch this one really close, because January is coming, and boy, there's a strong seasonal for meal and stuff. Cold weather, I don't know what it is, but there's a strong seasonal for soybeans and soybean meal to rally into the new year. So we'll be right back. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. This is natural gas, folks. Over the past month, you can see here on the Sunday night, we had a big gap up, stopped right at the 1.618 expansion and stayed there, folks, for 5 or 6 hours. Enabled it to get short around that 390 level. Then it had the big breakdown, and that was a big drop, folks. That was $4,000 today in the natural gas if you were looking at that. Now, that was a really nice ABCD. You can see the retracement here was exactly 786. There's your 1.618 expansion. Off of that move, this is a little lower, so it's 1.79, but look how it comes up here and makes lower highs in here, folks. Very, very interesting as we were watching that unfold. Want to show it to you in a little bit. There it is, the high. You can see right there. It was 93, rallied right up to that 90 level. Just absolutely perfectly, and it got all the way down here to this level, folks. That's a big drop, completed filling the gap and everything. So very nice. And that's when you're watching these things on a smaller time frame, using hourly charts and letting the daily charts tell you that time is getting up to the spot that you want to look at. That's really quite helpful from the way that I look at things. We've got one other question someone asked about another stock here, which is Caterpillar. Let's get this right up here right now. Hold on just a second, boys and girls. Get Caterpillar up here. It was in a downtrend. I don't know what happened to it since. Here's Caterpillar. Get this up here. And it dropped. Well, it stopped for some reason yesterday. Friday, and you can see there's we had a big ABCD there to the downside. Let's just see where we are on a longer time frame. Okay, there's where we right back here. You can see the 3 lower. There's a 1-3-5 pattern right here, folks, on the daily. There's 1, 3, and 5. The market breaks down, completes the ABCD, and if we measure it from your X to AB equals CD, and what does it come into? 157. See how much it missed the 618 by, folks? Probably quite a bit. Yeah, it is. Because it's 60, and yeah, it's got to get lower than this. It's going to get, I believe it's going to at least make the 350. This is a 1.618, so we should get a pretty good rally, maybe. Well, I'm really talking like a technician. Folks, I'm good. I'm looking at these stocks for you. I don't touch them. I look at foreign exchange and other stuff. That's what I'm focused on, okay? All righty. Now we have a question about platinum. We have one folks here from South Africa that's interested in platinum, and we're going to get that up here a little bit. Get the daily up. We know that the gold has been, actually platinum is holding up relatively well here compared to gold and silver. There was the 61. Let me update this, folks. Went up to the 786. Been in a really strong downtrend. We've got a little bit of support here from the ABCD group right here. There's your ABCD. We'll draw that in. Remember, platinum is only $50 a penny. I haven't traded it. It even misses the ABCD, so it didn't come in. But platinum used to trade at a $100 an ounce premium to gold, and now it's trading at a $1,700 discount. And that's because catalytic converters have been replaced by, what do you call these cars? EVs, whatever those are. Anyway, that's what we're watching here with the platinum. Now we have one other thing that I wanted to bring to your attention because I think it's important what we're looking at here. Now, I'm watching these numbers very closely because it means a great deal to me as I watch this unfold. Here's where we are with the cash S&P. This is not the futures. This is the cash. All right, we're going to update this to make sure I didn't miss anything the last couple days. You'll see where we closed on Friday. We closed right about there, exactly at the 382. We have not taken this out yet in the S&P futures or the cash. But remember, the futures got up to this level right here. That means the cash could get there. Futures could go a little bit higher, but this is the key to look at. This is the 20th. 23rd, 24th. How many days is that, folks? 25 is what? Christmas Day, and what would be the 6th day would be Thursday. Now, the reason why that could be important is because of this. And I did a lot of research on this. Probably ain't worth a hoot, but it ain't going to cost much to find out. We take a look at this right here. Where is it? There we go. There's your 5-day rally right there. That'd be the day after Christmas. Watch that day, because that's equal to this. And if you get something like that, chances are it might happen. And the really big outlier could be Bitcoin. Just because of that chart on Bitcoin looks so sick. I mean, this is major sick. I don't know anybody would want to buy this stuff. You just look. I know a lot of people made millions of dollars. Well, I know a few people have made millions of dollars, but not too many. But here's Bitcoin. You can see it's still 382, 382, 382 over the last 5 or 6 days. There's a nice little 3 drive to a top pattern right up here on December the 17th. And there's, as you can see, there's drive 1, drive 2, drive 3. There's your, oh my gosh, I missed this one right here. There's your first 382 retracement right here. There's your second one off of this. There's another one here, and then there's your big one right here, and then down, and then today you had one here also, and it's dropped from it's dropped $3,000. I don't know where it is right now, but that's a pretty big drop, from $3,000. And when it's 3% in one day, 3% in the stock market, they'd be carrying the bodies out if you saw something like that. But the stock market could never go down 3% in one day. Well, it's happened once or twice before. Today in the S&P was interesting in the morning because there was the overnight high. Then the market broke, and then right at the open, you can see the market rallied up, and then bang, they took it all the way down to 59.65, and we pointed that out to you that 59.65 was sitting right there, 59.65, ABCD, right at the 50% retracement, and we've been up to this area here, 27.28 already. So watching this close because that day after Christmas is going to be really interesting. If it's real strong, I'm probably going to be looking for another job. I was looking for this one when I was hunting for this one. So it's been pretty good to me for the past 60-some years. So I think I'm going to be okay because I'll stand out of the way and let them run it to wherever they want to go. But boy, it's got all the earmarks of what to look at. Finally, I wanted to bring this to your attention. This is the out of bull and bear, but this shows you the 1929 top in the stock market. There was the break right here. See, your big break was right there. That was what do you call it? The Black Friday. No, excuse me. It was Black Tuesday, the 28th of October. The market then rallied 3 days and then came down into November 12th. For there, it rallied up into 1930, April 1st of 1930. Believe it or not, that was a day, April Fool's Day. Boy, was it ever. And it just missed the 61% retracement here by a heartbeat. I think it missed it by, they're showing 52.16%. I'm going to question those boys about that because I have already done the work and it's close to 59%. Hey, we're going to take a break. Stay tuned, 877-927-6648, and we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is a chart of the the S&P cash. We posted this on November the 13th. Our good friend Nor Bashar over there in the UK said it was probably going to top around November 27th. This is the actual date of the top in the Russell and also the New York Stock Exchange Index, the broadest of all indices, topped on November the 27th. And now, of course, the NASDAQ went higher. The S&P and Dow didn't top until December 5th and 6th, respectively. But this is very, very important because we get above here, and all this work that I've been doing all these years is all for naught, and I'll have to go back to doing something else. I'll get back to that little Ouija board that I have, and we'll keep a close eye on that. Folks, the easiest trade in the world is Tiger Dollars, folks. You get 30 to 50% off. If you believe in TFNN and all the work we do here, You help everybody, including yourself. It's the best trade ever to take a 30%, 40%, or 50% return, and it's really well worth the effort here because we love doing these shows, try to give you as good information. One thing we're going to do is we're going to keep our cards to the vest, tell it how we see it. We take a loss. We say, yep, we're gone. We'll look at it some other time, but we're not going to say this could be the top, this could be the top, this could be the top. It's either going to be the top or it's not going to be the top. That's the bottom line. So live every day in an attitude of gratitude. Have a wonderful holiday. Help people to have nothing, folks. And there's a lot of people out there. We'll see y'all on Thursday morning. And then Friday will be our live trading day. And we'll have a lot of fun on that day for sure with the volatility we've got coming our way. So that's it. We'll see you on the flip side on Thursday morning, and Merry Christmas to all, and to all a good night. And also Happy Hanukkah. Comes on the same time this year, the 25th. That hasn't happened once his last time was 2005, so about every 20 years it lines up to the same time. So the Festival of Lights, Merry Christmas, may God bless.